After taking over 1,000 trades, this is by far the best order block and fair value gap strategy. And in this video, I'll break it down step by step of what is an order block and how we align it with the fair value gap to create this masterpiece of a strategy. So I'm gonna show you watch the whole video, because at the end we'll be going on the charts and execute this live in action. Without further ado, let's get straight into this video. So what exactly is an order block? It's not just any candle before a move. It's a zone where institutions accumulated volume, causing a major imbalance in price action. A valid order block must trigger a real shift in structure and remain unmitigated. It's when an order block is unmitigated that we can see this right here. A strong wick will go back higher to mitigate this order block, fill in the open or the 50% to then pull back lower to continuing the trend. So this right here is basically an order block. The last bullish candlestick before this strong displacement move down here. This last unmitigated zone is called our order block. This is the same thing in a bullish format. It's going to be the last bearish candlestick before we start getting this strong bullish move. This right here will become our bullish engulfing order block. This is our bearish engulfing order block. Make sure everybody is taking notes throughout all of these lessons right here. The 4 rules for real order blocks. We need an imbalance, right? That's the big move that gives us our clear directional intent. The order block must cause a market structure shift. This right here gives us our change in trend, where price was once in a downtrend, but after this shift, then we see that price change trends. Next, we need a inefficiency, right? A gap or a imbalance that haven't been fully filled. We see that the fair value gap. The fair value gap is what we classify as the magnet of the market, right? Price always pull back to mitigate a fair value gap before retracing higher. The fourth thing we need is an unmitigated zone. Like I stated before, an unmitigated order block has no prior wick, tap into it or wick into it before reversing lower or higher. These right here are the 4 rules for real order blocks. Even if one of these rules is missing, it's not a real order block. I'm telling you, it's a trap. These rules right here, these 4 rules give us the great clue that gives us our order block. Once we bring it all together, right? Once you bring it all together and you have everything together, you know what the order block means, you know what the fair value gap means. That's when now, right? When we're looking for our models, make sure you watch my videos on top-down analysis, where we go from the higher time frames, right? The 4-hour and all the way down to the 1-minute time frames, and I'm executing this. I have multiple videos on my channel for top-down analysis, right? Once you do your top-down analysis, and now you're on the lower time frames looking for your trades, looking for your entry, this is when you bring this together, right? You bring your order block and your fair value gap together to catch the best and precise entries. As you can see right here in this chart schematic, price built all this liquidity right here. Then price purged lower to clear all these old lows to then extend higher and give us a market structure shift. Like I stated, right? These are some clues that you need. You need that change of character, right? That market structure shift. Because price was once in a downtrend, but once price cleared these old lows and give us this shift right here, right? Now on that pullback, all we're looking for is a order block that's in alignment with a fair value gap, right? Because guess what? Price will pull back and mitigate the fair value gap, and price will pull back and possibly mitigate the 50% of the order block, right? The 50% is where a lot of the volume lies at. The 50% is just a lot of the volume, right? You could either place your trade. Me personally, I always place my trade at the open, right? Just because sometimes price come back, tap the open, but then extend higher, right? But you fail that 50%. So, but I always place my stop loss at the candlestick low, because if price push down all the way down here, right? Unless this was like a strong rejection order block, which this is not right here. So if price push down all the way lower, I know this is like an invalidated trade right here. This is just a simple clue, right? I always put my stop loss right at that candlestick low round here. But after we see price pull back and mitigate this zone right here, price quickly extend higher to attack this old high right here. This right here, this move is extremely fast, right? This doesn't take long, just because you have multiple confluences. Price tapped inside of a higher time frame zone. As you can see right here, this is your higher time frame zone. Then price rallied higher and give you a market structure shift, right? Changing the character. Then price leaves this fair value gap in this order block. So on that pullback, just mitigate that 50% to then quickly extend higher, clear that high. Nice and simple. I'm talking about like this right here is one of the best trading models. Now let's get into the step-by-step process Guess what? I've back tested this strategy and I've battle tested this strategy live with my trading team, right? The first step we have to do is mark our higher time frame structure. Start on the 4 hour to the daily. We have to identify the true structural breaks, not internal noise. Use structure plus imbalance zones to isolate OB zones that matter. It's priced in a higher time frame downtrend, where on the lower time frames we may get a pullback to a zone to then continue, right? Or it's priced in a higher time frame uptrend, where on the lower time frame we may get a pullback to mitigate a zone to then continuing that rally. The first thing I always do is I have to find structure, because you have to find structure. You have to trade with the trend, right? That's like the trend is your number one best friend, so that's number one right here. Now for number two, we drop down and wait for price to return. We go to the 15 or the 5 minutes time frames and watch how price returns to your higher time frame order blocks. We look for price to clear certain points of liquidity, such as the equal highs or our equal lows, before price taps inside of our zone. So as you can see right here on the 15 minutes time frames, price lets these relative equal highs, then price extend higher, clear these relative equal highs to then quickly push down lower and give us a market structure shift. From this old high to this old low is our dealing range, and we got this market structure shift or our change of character. You can label it that also. Order block right here, this broken old low, this we'll call our breaker block, and it's aligned with a 5 minute fair value gap. Right here, this is a powerful zone, right? We have a breaker aligned with a fair value gap, and we have inducement liquidity highs right near this zone right here. It's super easy. All we want to see is for price to pull back, clear this high, mitigate this zone to then quickly pull back lower to attack this low right here. But where do we place our stop loss, right? Let me put this right here. Our stop loss, right, is just outside the order block wick, not the body, right? Unless structure says otherwise. As you can see right here, for this right here, I put my stop loss right at the body of the candle because I knew that this wasn't a rejection order block. But as you can see right here, for this one right here, I put my stop loss right at the candlestick wick, just in case price want to pull back a little bit deeper, play around before it extends lower, right? That's kind of why I do that. And then just common sense, right? You should just avoid tight stop losses that get wicked out by liquidity hunters, right? Price is always seeking liquidity, so don't use like a super tight stop loss that price is just gonna clear you out to then quickly reverse, right? And then you're gonna get mad and get angry at the market. And for our target selection, our first take profit is the imbalance fill or the internal range structure low. Our second take profit is the next higher time frame zone, and then we usually partial out when price is moving correctly, and we trail the rest our profit. As you can see right here, this was the old low, right? This sell side liquidity low, and we also had these internal range liquidity structure lows right here, right? So after price mitigate this zone, all I'm looking for is for price to quickly extend lower, clear these internal range lows, and violently push down lower to sweep this old low right here. Hope you're getting a lot of value out of this video. Make sure you like, subscribe, and comment down below where you're from. And without further ado, let's hop on the charts and go over these examples live. Now on our charts, we're looking at EUR USD on the 4 hour time frames. Like I stated, we always start on the higher time frames and scale down to the lower time frames until we find our entries, right? As you can see on the 4 hour time frames, price left these relative equal highs right here. Price extend higher, clear these highs, then quickly push down lower and give us a market structure shift. And on that pullback, price give us a failure swing. Instead of a liquidity sweep, as you can see here, price failed to take this old high, but gave us a second body breaker structure. All we're using the 4 hour for is basically to find the structure. And we see that price pull back and give us another pullback here, mitigate this order block to then drop lower, to then pull one back once more, right? Mitigate this right here, this breaker, to then extend lower. So what exactly is the 4 hour telling us, right? That's kind of like the clue you want to figure out. Is the 4 hour telling us that we're in a uptrend, right? Or we're building higher prices? Or is the 4 hour showing us that price is pulling back, respecting and dropping, pulling back, respecting, mitigating and dropping, pulling back, respecting and dropping, right? So the 4 hour showing us that we are in a higher time frame downtrend. So on the lower time frames, when we're looking for trades, all we're looking for is for price to give us pullbacks into higher time frame zones, right? Either a 15 minutes or a 1 hour zone to then quickly extend lower to continue this higher time frame downtrend. Now let's scale down to the 1 hour time frames to zoom in just a little bit. Now we're on the 1 hour. We see price pushed up higher and mitigate this old low to then rally down lower to clear this old low right here, giving us this new dealing range from here to here. Now let's go down to the 15 minutes time frames. Now on the 15 minutes, right, all we're doing is kind of like zooming in even more and more, right? I want to break it down slower just so we can understand it better, right? You want to zoom in more and more and more. As you can see right here, price left this right here, this breaker that went higher to mitigate this old low. It took liquidity from all these old highs right here to then extend lower and broke this old low right here. On that pullback, price mitigate this to then push down lower. So this right here becomes our new strong high. From this high right here, this is our new dealing range from here now to here. Because now, right, you kind of see that price pull back. But why did price pull back? Price was just pulling back to clear this inducement high, as you can see, and we have a fair value gap aligned with this order block right here. But this is not our entry, right? This is not our entry. This is just the higher time frame top down analysis where we're just zooming in more and more and more until we're either landing on the New York or the London kill zone, as you can see right here. For this trade, this is a London kill zone trade. The London kill zone starts from 1 a.m. right? I'm gonna put 1 a.m. to around, I would say 5 a.m. EST right here. It can lead, right? It can lead to around 7. I'm gonna put 7 right here. That's when, like, the London close area times, right? The London close area before the New York session starts around 8:30. As you can see, price after price mitigate this right here, mitigate this order block, right? Price extend lower and give us a market structure shift of this old low right here, right? But this is one of our patterns. Price went higher, mitigate this order block, push down lower, market structure shift, left this inducement high. So on that pullback, we see price clear this high right here, so then quickly displace lower. And this is happening during the London kill zone. So if you are like a London session trader, or you are a trader that trades in the Europes, right? In Europe, in any country in Europe, I would say this right here is a beautiful trade to take, right? You have a liquidity sweep and a lower time frame market structure shift right here. But you know that on the higher time frames, price is seeking these old lows down here, right? So now all we have to do is look for our trend. Can you see the model already, right? If you're a person, you see the model and it's clear, good job, right? But if you're a person, you don't see it yet, let me show you right now. So we see that price went higher, give us a liquidity sweep to then push down lower on that displacement leg. Like I stated, on that displacement leg, price always leave a fair value gap. And when that fair value gap is aligned with a order block, as you can see here, this makes this a extremely powerful zone right here, right? You just place your trade right at the open and your stop loss at the candlestick wick, like I stated right here. Your stop loss at the candlestick wick, and I'm targeting this prior low down here. Perfect. This could be your first take profit, and this is your second take profit down here. The only reason, right, I would take my profit here, always target inter-range structure. Price may reverse here, right? We never know. You never know. Price may reverse right here. So I'm gonna take the low-hanging fruit. This will call low-hanging fruit here and here. Let's play price. Price pull back, as you can see right here, mitigate our fair value gap and this breaker right here. Now we want to see this price extend quickly lower down here. It stayed inside of this zone, right? And it also stayed in there. As you can see, this is why you give your trades room, man. This is why you give your trades room, because look how much times it tested it. Once, 2 times, 3 times, 4 times, 5 times. Like, it kept pulling back in here and kept retesting it. But guess what? My stop loss is at the wick, right? As long as you have a good size stop loss and you manage your risk properly and you're willing to lose that, right? That's the first step to like trading psychology. Whatever you risk, be willing to lose it so you have no fear in holding your trades. Let's finish this right here. Perfect, right? We see price quickly, right? Quickly extend lower, purge through these lows right here. As you can see, price started playing around here, quickly reversing. But we got our target right here perfectly. What did we use? We used the higher time frames, right? This is the higher time frame structure, right? Then we kept zooming in. On the lower time frames, we did a top-down analysis. We went from the 4 hour, the 1 hour, the 15 minutes now to execute this strategy. And if you even want to take this as a scalp, and if you want like a way better entry, you could even scale down to the 1 minute time frames, right? The only way you can take this on 1 minute time frames is that you need more confirmations. You need way more confirmations. As you can see right here, let's pull this back. So this is our 15-minute zone right here. Before we can take this trade, right, as you can see, we need a market structure shift. Once price comes inside of our zone, right, as you can see, we need price to extend lower to break a prior low. As you can see, this old low or this old low. We need a swing low. This right here is our swing low. So price mitigate our 15-minute fair value gap in our 15-minute order block. This becomes a strong high, right? Strong high. It cleared all these old highs, mitigate this zone, and give us a market structure shift. Now on the 1 minute, if you want to get like a precise entry, right, this could be like your 1 minute entry. But for me personally, I wouldn't trust this entry right here just because it's too fast, and it's like you're gonna be way more shaky, right? You're gonna be way more shaky. The entry I would trust is this one right here. When price give us this Ferrier swing, as you can see right here, and give us this second market structure shift, this is our confirmation entry. Anything in this zone right here, as you can see, this whole zone right here would be my entry. This whole zone from here to the low to this high right here would be where I place my entry. And I'm targeting these old lows, the same lows that I targeted before perfectly. Look at this right here, right? Either you can take this on the higher time frames, right, on the 15-minute time frames, or you can scale down to the lower time frames, the 1 minute time frames, to scale even more and wait for more confirmations. As you can see, once price tap inside of our 15-minute zone, all I'm looking for is that market structure shift and for price to respect prior highs. Once price start respecting prior highs and give me a second displacement, this second displacement right here, this old low, this right here is going to become my confirmation entry. It's super simple, right? This is where I'm going to take my entry. I can take my entry right here also, right? But this is the risk entry. I don't know if price is going to come back in here, right? You don't know if price is going to come in here and play around, right? Take you out, right? This is how like a lot of traders get stopped at. But you can either take this trade on the 15 minutes time frames or scale down on the 1 minute time frames and take that confirmation entry as your scalp entry. Well, this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.